So the US dollar is heading for its third straight weekly gain. Gold is taking a breather just below record highs. And while gold's doing that, the FTSE 100 casually said, wait, I'm going to set some new record highs like it's a normal Friday. So the question here is, are markets calming down or just putting on a brave face before the weekend headlines hit? Because let's be honest, Friday and the markets have a habit of saying, relax, and then doing the opposite. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and this is your daily market brief. Today we are going to break down GBP USD, aka the cable, gold, and the FTSE 100. We're going to kick things off with fundamentals, move over to technicals, and add just enough market humor to keep things lighter than, well, a Fed that's suddenly not in a rush to cut rates anymore. Let's start with the broader macro setup for today. The US dollar index is holding near 99.3, positioning itself for a third consecutive weekly gain. Strong US data is the main driver here, pushing back expectations for additional Federal Reserve rate cuts. Weekly jobless claims came in well below forecast, pointing to a resilient labor market. Several manufacturing surveys surprised to the upside. Fed officials reinforced the message that the labor market remains stable, while flagging ongoing inflation risk. As a result, markets widely expect the Fed to keep rates unchanged later this month. Expectations for the next cuts have been pushed back to June or later. Then we also have the geopolitical and trade front, where the US has agreed to lower tariffs on Taiwanese goods from 20% to 15%, while Taiwanese firms committed $250 billion in US chip investments. The US president signaled a possible delay in action on Iran, while reiterating interest in pursuing the acquisition of Greenland. So the macro tone today is relatively clear. Growth is holding up, rate cuts are being delayed, and risk appetite is selective rather than reckless. Starting off with the cable, GBP USD is holding near that $1.34 handle as the pound steadied after UK economic growth exceeded expectations. UK GDP rose 0.3% in November, rebounding from a 0.1% contraction in October, and comfortably beating forecasts. Over the 3 months to November, GDP expanded 0.1%, defying expectations for contraction. The stronger growth profile has slightly shifted rate expectations. Markets now price around 46 basis points of easing by year end. A first rate cut is fully priced in by June, while high probabilities placed on April. However, the pound hasn't had a free run higher. The US dollar remains supportive by strong labor data and Fed caution. That kept GBP USD gains measured rather than explosive. So in short, this move feels less like a breakout and more like the pound reminding markets that it's still in the conversation. Looking at the chart, GBP USD remains below near-term resistance, which is sitting at 1.344, as well as the 100-period exponential moving average, which is acting as dynamic resistance. Near-term support is sitting around 1.327, followed by 1.305. The stochastics on the daily time frame is near 50, reflecting balanced momentum, which means neither bullish nor bearish. The pair is consolidating, waiting for a stronger catalyst to pick direction. So, does growth data continue to soften expectations for aggressive Bank of England easing, or does the dollar keep control near the top of the range? That's the question to consider going into this trading session today. Moving over to commodities, gold is pulling back modestly, trading around $4,600 per ounce as safe haven demand eases and expectations for near-term Fed cuts fade. Several factors are weighing. Strong US economic data has pushed rate cut expectations further out. Geopolitical tension around Iran have temporarily cooled after Trump signaled delayed military action and allies urged restraint. Risk sentiment improved slightly as equity markets stabilized and said context matters. Gold is up more than 2% this week, making for its second consecutive weekly gain. Prices remain close to record levels, suggesting this is consolidation rather than capitulation. In other words, gold isn't panicking, just pausing. Looking at the charts, gold trades below the 21-period exponential moving average around 4,608, with the 100 and 200 period exponential moving average still pointing higher, reinforcing the broader bullish bias. Immediate support sits near 4,570, followed by 4,510. Resistance remain near the recent record highs around 4,643, with 4,670 beyond that. Momentum indicators suggest cooling rather than reversal as overbought conditions unwind. So think of gold right now as a marathon runner, slowing down for water but not stopping the race. Finishing things off today with equities, the FTSE 100 closed at a fresh record of 10,241. Powered by renewed risk appetite and strong gains in financial stocks. So, what's driving this move? Well, better than expected UK GDP data boosted confidence in growth and credit conditions. Banks led the charge with HSBC, NatWest, Barclays, Lloyds, and Standard Chartered all higher. Schroders surged more than 9% after flagging earnings above expectations. Miners also contributed as sentiment improved. However, not everyone joined the party. Defensive healthcare stocks lagged, and BP slipped more than 1%. However, if we zoom out a little, the FTSE is up more than 22% year on year and nearly 6% over the last month. This rally, in other words, feels less like speculation and more like reflection of improving confidence in earnings and growth. Looking at the charts from a price action standpoint, the FTSE remains in a strong uptrend, consistently printing higher highs. The FTSE is trading below the 161% Fibonacci extension level, which is acting as near-term resistance at 10,240. Near-term support is sitting at 10,120, followed by 9,930. Momentum remains constructive, though elevated levels suggest sensitivity to any negative surprises. So the key question, does earnings season keep validating this optimism? Or does volatility return once the headlines change? We'll have to find out real soon. But heading into next week, here's what's on the radar. First things first, can the dollar extend its weekly gains if the US data stays firm? Upon that, does GBP USD finally break out of its range or stay boxed in by dollar strength? Or will gold regain momentum if geopolitical risk resurfaces? And finally, can the FTSE defend record highs once earnings season ramps up? Markets may be closing the week calmly, but Monday has a habit of rewriting the script. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.